I'm Phil Grant at philsgang.com. I'm going to just give you some straight talk. That's it. You know, I'm so sick of what's going on, and all we hear from all these TV shows, all the crap, I mean, it's just unbelievable. None of it's true. Their job, the fake Business News Network, is to make advertisers happy. Because if it wasn't for advertisers, the fake Business News Network wouldn't be on the air. So they got to give them a bunch of excuse the language BS. We're being told how great the economy is. Things are good. Things are strong. We're going to be okay. No, we're not. We're not going to be okay. First, let me show you why. Look over here. I got two charts. This is the S&P right here. And this chart here is the S&P. And I want to show you what's going on. When we had that rally from March 2009 up to January of 2022, it only rallied for one reason. It rallied because of zero rates. Hell, you give companies money free, don't have to pay for it. They're going to buy their own shares. Because when they buy their own shares, there's less shares available. And when there's less shares in the pot, stock price goes up like anything else. If there's less of anything, prices go up for demand. And that's what they did in 2009. And they printed and printed and printed all this money. So they could buy Treasury, get rates down to zero. But everybody's getting it right up the rump. They are. But they don't know it. They're walking around like, whistling by the graveyard. This market is going to have one hell of a crash. But first, before any crash, you want one hell of a rally. Just like what happened with Enron. Remember Enron? Right before the crash, they had one hell of a rally. So if you take a look at the chart, again, over here, this market ran straight up. All zero rates. Couldn't hold it. It failed. Went back to that October low. Of course it couldn't hold it. It was all fake. It wasn't earnings. Wasn't manufacturing. Wasn't profits. It was all a big bubble. But then they came in and held it in October. What'd they do? The Federal Reserve turns around, puts a pool of money together, about $15 billion, and they told the four biggest banks they control to go in and buy Microsoft and buy Apple. Why? Because Microsoft and Apple can't go up when yields are at 4%. Are you kidding me? 5%? It kills them. So that's how they pushed the market up. And then the March came. What happened in March? The banks, three big banks, three of the biggest regional banks collapsed. So what did they do then? Oh, well, they printed $2 trillion and created the banking program to make sure the banks didn't go down. And they also made sure that Apple and Microsoft would push the market up. Now that the word's out there, hey, we bailed out the banks. Everybody went nuts. Well, you're nuts. But then when it came to trying to get back to that high, 2022, right there, that high, it failed. And then it failed 4 different times. Even though they increased rates to fight inflation about 20 times. And they still can't get above that high. Right. So this week, look at this chart here. What are they going to do this week? This week, they're going to try to push it up again. Why? Well, this is the end of the blackout. What's that mean? Well, it means before earnings season comes, you no longer can do stock buybacks. But that's coming to an end on Friday. Everybody's all excited. Oh, we can go back to stock buybacks? Yeah. Oh, and by the way, we've been lied to by Powell. He keeps saying to us he's not doing any more QE. He's not doing any more zero-rate money. That's a bold-faced lie. What he's doing is he's taking the balance sheet, is about $8 trillion, which is made up of what? Mortgages on his balance sheet and bonds. And he's taking that income that he gets every month on that $8 trillion, and he's giving it to the 4 biggest banks, 5 biggest banks, to go in and buy treasuries to keep rates down as much as they can. While on the other side, he's pushing up to fight inflation, he's telling us. This is just a bunch of crap. So now we got a position here on Friday. He's going to come in, and they're going to try to rally the market one last time using the blackout. The blackout is over with, and they're also going to use tomorrow, which is going to be the 18th. They're going to get earnings from Tesla and Netflix. You know what they're going to say about that? Oh, look how they beat expectations. And you hear what they did with the banks? When the banks came out this week? Citi and Wells Fargo and JP Morgan, the fake business news network, the jibber jabbers. Boy, did you see how strong those banks were? Man, they beat their expectations. They beat their top line expectation, their middle line expectation, their bottom line expectation, their brother's expectation, their aunt's expectation. Isn't that great? The banks are just beating all expectations, but they don't tell them it's their own expectations. What a bunch of crap that is. Are you nuts? So this week they're going to try to get a rally going using the expectations that they did on earlier this week. They're going to use the earnings tomorrow from Tesla and Netflix. And and what else are they going to use? Expiration. Big expiration this week. It's all going to fail. It's all going to fail. For the same reasons the market failed from 2022 down to that October. That whole rally from 2009 to 2022 failed. Why? Because the same things that caused that market to fail still exist. We still have the inverted yield curve. We still have tremendous debt. I mean, inflation. Nothing has changed. Now, Biden continues to tell us how great the economy's doing and how he's bringing manufacturing back to life. And we're going to rally because the economy's doing good. Really? Then why is it the U.S. is experiencing the largest economic downturn since the recession? Why is it that manufacturing production in the last 6 months, real wage declined 24 of 32 months? If things are so good, wages don't go down 24 of 32 months. Overtime, that's what you look at. Overtime tanked. Went from 4.5 hours to 3.2 hours. Why is overtime important? Because when you start paying a lot of overtime, it starts going up, that means they're going to hire. When it starts to decline, it means they're going to lay people off. Now, think about what they're doing. They're telling us how great manufacturing is. Well, that's not true. Manufacturing, we just got the New York Fed came in, and manufacturing in New York State is terrible, horrible, just really bad. And the other thing, what are we finding out? What moves all of our product? Container ships. And 69% of the contracts in the container ships, the same time last year, right now, are down 69%. So 95% of our goods get pushed around by container ships. Why? Because it comes from China to L.A. 69% of the contracts are gone, kaput, gone. Are you kidding me? It's over. They used to bill, a container ship would bill you $7,800 last year this time for a container. You know what they're billing you now for a container? $1,800. But wait a minute, I thought we were told that, boy, he's really putting life in manufacturing. He's bringing manufacturing back. Manufacturing's tanking, for God's sakes. It's tanking. And the banks. Banks are getting worse. They're going to bait. The thing about this, we're going to have a big rally and everything's okay. Wait a minute. Banks are tightening loans. You know what that means? When banks tighten loans, when people need it the most, they need the help the most, it kills the consumer. It kills them. It's killing the consumer. Banks are in deep trouble. So the problem is the government keeps spending more money than the tax revenue. So we run deficits. So what do? The government says to the banks and to you, the saver, pull your money out of the bank. Give it to us. Lend it to us, the government. What are you getting for 90 days at the bank? 1.2%? How about we give you 5%? Can you believe the government who taxes us is competing with us. The government goes and tells people in the bank, take your money out of the bank, loan it to the government, and then what do the banks do? They don't lend. And when they do lend, it's going to be at higher rates because they have less money. Who the hell is running this ship around here? This is insane. And I look like an idiot when I tell people the market's is in a crash. I could go on all day, but you don't want to hear it. Most people don't want to hear it. So the last thing I'm going to show you is this. This chart right here I'm showing you proves we're in a crash. And I could go on all day. You want me to go on all day? I'll tell you all the things that are wrong with this economy that nobody tells you. Nobody wants you to know. Matter of fact, most of the people don't want to know. They just go like this, put blinders. They don't want to hear all this. This market from March 2009 to 2022 could not hold its rally. They couldn't because it was zero rates, all fake, a bubble. No earnings. Earnings is everything. And then when they try to rally from October back up to that January high, they couldn't. It failed. And then they failed again and again and again. 4 times they failed. So I don't care what they do this week. I don't care what they do during earnings season to drive this market up. It's going to fail. And you know where this is going to go? We're going to go right back down to the 2020 low. That's right. Know what that means? From January, the high, to that 2020 low, that pandemic low, that's a 50% drop. That's where we're going. Nobody wants to believe it, but it's going to happen. I don't care what they do. And oh, by the way, someone's going to say, don't listen to Phil Grandy. He doesn't know what he's talking about. We're going to go back to zero rates. No, here, I'll tell you a secret. You can't go back to zero rates. You want to know why? The only reason they could print all that money to run a 650% gain in the S&P from 2009 to 2022 and a 1,500% rally in the NASDAQ because inflation was at 0.38, wasn't even a 0.5%. Their target's at 2. So they could print all the money they wanted from that 0.38 up to 2%. And that's what they did from 2009 to 2022. But now we're beyond 2%. We're beyond 2% inflation. We're over 3%. We're actually at 3. That's a bunch of nonsense, too. Inflation's about 10%, but I'll use their lies. 3.5%. They can't print. They can't do zero rates because they're so far above their 2%. It was fine between 0.38 and 2, but now they can't do it. They're in a bind. All they're doing right now is trying the big institutions, taking their biggest clients, taking all the pension funds, all their pails, the insurance companies, getting them out, just like they did with Enron. And once they're out, they're going to pull the plug, and this market is going to drop. Look, for more information on this crash and on this market, just go to my link, my bio. And you can have all the information, you get daily updates, anything you need to help you. I'll see you on the charts.